So who is moderating this panel?
I am moderating this panel.
Okay, so Anand is moderating this panel. So,
yeah, good afternoon from Los Angeles. We currently have David Doss, we have Amandeep Midha, we have Clark Barron, and we are waiting on Catherine Shen and Sanja Khan. Carl, do you have them in the waiting room?
We are looking.
No.
Hazel says they are not yet in the waiting room.
Okay, so maybe we start now, and as they come in, you can let them in
Can
for
you
us.
take my camera off?
Okay, wonderful. Thank you so much for joining the panel. Sorry, it's been a rough few days here. Finally, we are in sunny California. It is sunny again. So welcome again. The panel today is now FinTech solutions for banks. Obviously, as we look at how the world has changed and how the pandemic has driven change into the way that people bank around the world, certainly FinTech has had to adapt very quickly. Where there was resistance previously to online banking or to digital wallets or to all sorts of blockchain enabled systems, now there's a greater acceptance. And it certainly is a very interesting time for both the development side as well as the investment side into these businesses. So I'm going to start it off by having you just give a brief introduction to yourself. Amandeep, why don't we start with you?
Hi, thanks Anand. Pleasure to be here. I'm Amandeep. I'm based in Copenhagen, Denmark, and it's like 11 p.m. right now. My background is basically FinTech before, and now I work with the banking setup, basically building data decoupling and high frequency data systems for banks to be able to compete. And yeah, I will come back to that more.
Okay, wonderful. Thank you. Clark, let's have your introduction, please.
Hey everyone, my name's Clark. I'm the co-founder of a microfinance institution in Uganda, which is like a small bank. And I got started into FinTech out of fear that blockchain was going to come in and take down the banks. So I have, for the last several months, been researching where might banks fit into a future blockchain-based economy where people own their own assets and don't want to put their money into a bank. And so I currently, after doing my own research, I think that there is a place for banks in this future economy, and I'd be happy to speak about that further.
Excellent. David.
Hi, everyone. I'm David Doss. I'm one of the founders of CKC, which is a discretionary or hybrid crypto fund partnering with ChainBLX in the Cayman Islands. And in terms of my background, I've been involved in tech and FinTech for a while. Notably, I've worked on projects at Citibank around open banking, FinTech innovation. So I'm very excited to be on this panel talking about kind of the bridges between traditional systems and some of these newer systems through blockchain.
Excellent. If I may have you expand on that, David. When you look at investments today in the FinTech space, what are you looking for?
Well, specifically for CKC as a crypto fund, we primarily invest into tokens, specifically fungible tokens and cryptocurrencies. We do explore, and we do have positions kind of more targeted towards the FinTech space as a whole, I guess outside of the specifics of blockchain. But I would say some of the main things we're interested in the kind of banking and finance side of blockchain as relates to tokens would be a couple of things. So for one, I would say risk adjustment is something that we're very interested in lately. So there are a lot of these decentralized finance or DeFi projects coming out, looking at basically providing people with optionality. Say, do you want to have, potentially very high capital appreciation through your DeFi investment with perhaps more risk, or do you want to have more of a kind of a fixed income type of approach within crypto? And so these solutions that tend to balance those two concerns of kind of lower risk, steady reward versus high risk, high reward, we find those to be interesting. Also, some other areas of interest at the moment around banking and financial solutions would be around software to improve blockchain trading. So there's a lot of still issues around fraudulent activity, let's say front running, these sorts of things. So solutions that leverage basically layer 2 solutions, leveraging side chains to help improve transaction speeds while also mitigating fraud, while also protecting privacy. That's kind of a three-cornered issue. We find those to be of interest as well. And I could go on, but those are some that come to the top of mind.
Well, David, I would be remiss but to ask you a very simple question and saying, how about high frequency trading platforms?
Yes, so certainly there's a lot right now in crypto that needs to mature. And so specifically services for funds, services for traders are still in their relative nascency when it comes to crypto specifically. So certainly, order management systems, trading platforms, all of these sorts of solutions are definitely of interest. I mean, ultimately, we found with our fund that we've needed to build out a number of solutions more in-house, just due to the limitations of some existing tech, and due to basically our desire to provide a specific high quality of service. And that I think that circles back though also towards let's say more traditional banks, where the types of banks that we're interested in working with are ones maybe they don't have, let's say, blockchain solutions per se, but maybe they have open banking programs, APIs, these sorts of things, where ultimately, to your point, if money is kind of our building blocks through which we build value for our investors, then APIs are a huge part of kind of shaping those building blocks.
Okay, terrific. Thank you so much. Amandeep, let's switch over to you a little bit. When you look at your platforms that you're developing at this point, what's the future look like?
Around 2 years ago in Europe, we were talking about open banking and PSD2 because basically the banks have to expose their account services and payment services through APIs, which has been done now. And now we're talking about building the solutions on top of it. And one is like, if the data is available through the APIs, as David said, like, so how fast we can act upon the data. So yes, there was some systems like which helps you in trading. Yes. What about the live, what you call risk coverage? Do you need actually kind of an end of day report, or the report should be live enough for you whenever you look at it? So we are talking about seeing the data as a stream of events, a stream of actionable events, and you can take a real-time decision. And to the extent of first, we came down from bringing down the payment settlement time. It's not T+2, it's not T+1. It can be real time. A few of the Nordic solutions have already proven it. P27 is another project which you can follow up. You can check it online. And then it's like the enabler functions, as we call, which is like retail banking, like from a nightly updated balance to a live balance, from a limited customer view to a 360-degree view, because customer address changes happen, customer transactions have happened, customer suspicious transactions have happened, and everything should be actionable in a very short span of time, maybe within a couple of hours. Capital markets risk platforms, yes, that has been the first adopter of some of the platforms. Some of the solutions are built early on that. Algorithmic trading also, but then it's about decoupling of services, especially related to account, payment, transfers, and overall agility in a way like European Central Bank actually has said in 2020 report that high frequency data and its analysis has become a pivotal tool for central banks. So basically that's the kind of investments from the central banks we are also looking into. Yeah.
Okay,
so
let me welcome Catherine Chen to the panel. Catherine, if you would be so kind as to give us a brief introduction about yourself and your view on the future of fintech for banking.
Sure. Hi, everyone. Thanks for joining today. I founded MarketX Ventures 7 years ago. Before that, I was in investment banking, focused on US and China IPOs at JP Morgan, Deutsche Bank, Rothschild, London, New York, Hong Kong. In the past 7 years, we built a platform that helps high net worth, family office, institutional investor to trade pre-IPO shares. And then in the last year or so, we also started Infinity, which is a pre-IPO platform but traded in crypto. So all these new things are kind of taking off given where the fintech trends are going. On top of that, I guess what's interesting is we also invest in fintech. So far we invest in Robinhood, Toss in South Korea, Klarna in Sweden. Now we're looking at a couple of interesting African fintech deals. So definitely very excited about the space and seeing where the world is converging. We've invested heavily in US and China pre-IPO fintechs and payments when it comes to APIs for banks. Very exciting. News are coming out. We're also excited about the divergence of some of the traditional players looking at DeFi. But at this moment, I think we're still very early in that revolution. So I'd love to share my views and hopefully more exciting news with the rest of the group.
Wonderful. Clark, you're on the opposite end of the spectrum. You're a user. You're a user of fintech technology and in a frontier. So tell us a little about what you're doing as far as fintech is concerned, and where do you see fintech going that helps micro lending?
Yeah, so when I started getting into blockchain, I started thinking about what are the applications for the poor? How can poor people use this technology? And what I learned quickly is that in DeFi, currently, if you want to take out a loan, you need collateral. You have to actually over collateralize. So you can take out a loan, but you'll have to stake twice as much collateral as the loan you want to receive. And that doesn't work for people who are poor, the micro lenders that we give money to. They have no collateral. And so I started thinking, well, what if a microfinance institution staked collateral on their behalf? What if they took the risk? And that way the borrower could then access DeFi lending pools. And then because on top of that, if the DeFi lending pool also had some information about the portfolio at risk of a microfinance institution, then the microfinance institution would only have to stake enough collateral in order to cover its portfolio at risk. So if a microfinance institution, say, has a portfolio risk of like 30% and has $1 million of assets under management, instead of lending out that $1 million, it could put the $1 million as collateral, and then it could lend out $3 million. But the transaction would actually happen directly between the microfinance borrower and the DeFi lending pool. And then once I started realizing, wow, this is a great way that banks could help connect people to the DeFi world without collateral, I started realizing this could be the future, not of microfinance. This could be the future of what banking looks like broadly. Because as people start to realize that, hey, it's better, it's safer for you to own your own assets, to not have the counterparty risk of what happens if your bank fails and loses all your money, like we see happening in Lebanon and Venezuela and whatnot. And also, people who own their own assets, they can stake it and earn a higher yield than the interest rate that they're getting currently from a bank account. And so I started realizing people are going to start moving their money from their bank accounts, and they're going to start staking it in DeFi. And what's going to remain with banks once they have no reserves, or once they have no deposits? I mean, what do they have left? Well, they have assets, and they have teams of financial analysts. And so if we want to be able to allow people who don't have collateral in order to take loans, then perhaps those people, instead of borrowing against their own collateral, they can go to the bank, and the bank will be able to analyze, hey, this person wants to buy a house, or they want to buy a car, or they want a business loan. They can be the financial analysts that allow under collateralized loans out of DeFi lending pools, which right now doesn't exist. And the way smart contracts work, without a situation like this where a third party stakes collateral, it probably won't exist in the future without a third party who can act as a financial analyst. Does that make sense?
Absolutely. Let's take that to Amandeep. Amandeep, you know, the process that's been described by Clark is quite complex. It isn't something that, you know, mainstream developers are looking at, if you would, or because financial institutions are not looking at it. So is there a market for something like this from now purely a developer business perspective?
Yes, in a way, like if basically smart contract and flash loans, which we call in DeFi universe, a block time, which is like a 15 minutes of flash loan, that is possible algorithmically. And if your financial systems are ready, if the API you can invoke, which can give you a loan, I'm just talking from the traditional finance side right now, not from the DeFi essentially. The DeFi value proposition of flash loan of 15 seconds, 15 seconds, not 15 minutes. If it's possible algorithmically, and from the traditional finance system with APIs running at a high performance, scalable speed. So yes, there's a competition possible to DeFi space from the traditional banking side. But technology investments, which kind of a banking sector has kind of lagged and now trying to catch up. So that is one thing. And second is like, I'm not making this discussion DeFi versus banking, but in terms of like how fast you can act on the data. Because a customer 360-degree view involves customers' movement, customers' bank account transactions, applying for certain loan, upgrading certain insurance. If a bank has a complete view of that customer's needs and what immediate actions can be taken on an address change, can a bank just automatically send a welcome to new home kind of a welcome letter? And this could be the insurance which suits best for this apartment. Well, this is possible. So those kind of solutions and automations, yes, we are talking about in customer experience side, from the mortgage side, from the insurance side, and more APIs and more connectivity available between these financial systems, existing systems I'm talking about, more solutions can be visualized and built. So we're talking about that, building that groundwork.
Yeah, no, that makes sense. Yeah, no, absolutely. Catherine, coming back to you, tell us a little bit about your journey into investing in fintech and especially fintech for financial institutions and or financial institution related fintech. What is your thought process and how do you evaluate companies when you look at them?
Yeah, sure. So I guess the first part, I've done quite a few integrations with financial institutions when I first started MarketX. So from day one, we were US and China. I flew from San Francisco to Beijing, Shanghai every 2 weeks. We try to integrate with all the largest wealth management firms in the world to offer pre-IPO shares. So in the past few years, we've done over 250 million transactions in these pre-IPO names. Some of them are also broker deals, which then, we're talking about getting access for the shares like Discord, Epic Games to the large institutional players. So for that, we definitely spend a lot of time learning what is their system. But one thing that I have to share is, when I went to in Beijing 2015, we tried to actually offer a private chain, which we built with Vitalik, to like China UnionPay, which is like the Visa of China. They're like, we already have the China digital yuan in place. So, the game plan was a long time set. Brian Armstrong tried to go to China. We've already seen what happens. So we decided to come back to the US because there was no game to be played there. The government was just like way ahead. So we decided to focus on, offering our deals to high net worths, in the decentralized world. In this case, a lot of people are already heavily invested in, private companies at early stage. Now it's about actually tokenizing these assets so that anybody have access to getting to, pre-IPO deals like ByteDance, TikTok, right? Previously, it was very difficult even for institutions to buy these shares, not to list the retail accredited investors. So what our goal and mission is to basically create a place where anybody can get access to top quality verified companies in a growth to late stage pre-IPO space, and then be able to create liquidity amongst each other. So one of our goals is to partner up with exchanges and partner up with other groups, on-ramp, off-ramp groups, to make sure we can offer this service to various jurisdictions. Right now, we're active mostly outside the US. We're trying to create our offshore office in Dubai, Zurich. So, for folks here who are active in these regions, please reach out to me. Love to see how we can build up our operations in Europe and Middle East. On top of that, we're trying to work with institutions like asset managers, multifamily offices, on how to get them into the decentralized world, but trading actually assets that's worth something, right? So all the deals we've done so far have generated 300 to 500% return in 1 to 2 years. And that's why our clients come back to us, right? We're not trading shares of companies that nobody knows about. We're actually trading shares of companies that most people have heard of. So I think that's the world where there's a convergence between traditional finance and decentralized finance. And we're very excited to be part of it.
Okay, thank you. David, coming back to you, I'm gonna have everybody kind of give their final thought on a 30-second thought on what is going on and what do you think the best possible future is. So David, I'll start with you. Let's talk a little bit back to fintech solutions for the banking sector.
Yeah, so ultimately, I'm excited just kind of thinking back on how this all has progressed even over the last 4 or 5 years. I'm very excited to see, what the next 5 years look like. It really seems as though there's an increasing level of adoption of blockchain technology within banks, as well as increased openness to work with blockchain and cryptocurrency partners, vendors, et cetera, around the world. So certainly a lot of the solutions that the other panelists have been talking about around streamlining complex workflows, optimizing internal processes. I think that these have huge potential and have been made much more viable even in the last couple of years through layer 2 systems that enable side chains, interoperability solutions that provide synergies between public and private blockchains to potentially provide the best of both worlds, as it were. These are things that banks will stand to really benefit from over the next few years. And ultimately, I think that I'm looking forward to this kind of juxtaposition of the traditional finance world and the decentralized finance world kind of softening on a functional level, there being more collaboration, because ultimately crypto, while often seen as kind of this Wild West, blockchain as well, seen as this kind of Wild West by some legacy players, it really has many of the same goals, where ultimate, goals of blockchain are around optionality, transparency, all of these sorts of things that really can and do and will increasingly dovetail with more established priorities around KYC, AML, all of these sorts of things.
Okay, great. Amandeep, we'll have to be quick. So, we're out of time.
Yeah.
So go.
Yeah, exactly. As David just finished, like he mentioned AML. So I was giving the example, like a customer changes his or her address. So and immediately now onwards, the new transaction you start checking because this address happens to be in a suspicious zone or something. So these transactions are getting flagged at the same time through a decoupled process. And at the same time, a welcome letter is issued to this customer that on his new apartment, and this is a new mortgage and a new insurance possibly. So these are the decoupled different workflows which can happen immediately. And then coming is like how a bank or a traditional financial institution would like to set up a kind of their own pipeline. One thing I think nobody has mentioned here is CBDCs. Not that I'm personally a fan of them, but imagine a situation like it's a kind of a stable coin which is backed by the government, backed by kind of a traditional financial institution, probably in the future. How fast the fluidity will be then from the banking to DeFi world and back and forth. So that's a kind of a huge kind of opportunities which also will open up.
Yeah, thank you. Mark, very quick. You've done something interesting and impressive, and you're looking to develop something on the side of software. Is this the solution, and when do you see the solution happen?
Asking me?
Yeah, I think that the final message that I would want to leave is that as someone who owns a bank, the other bankers out there, we're at a very pivotal moment. Like, this is a survival of the fittest type of situation. And for those of you who are scared of what the future of your bank would look like, please reach out to me. I've spent a lot of time thinking about what is our fit, like where do we still fit in a world where people are self-banking and they don't need to put their deposits with us. So if you're in my same situation, then you can reach out to me at my website, clarkveron.com, and I'd be happy to share more on the solution we talked about.
All right, Clark, thank you so much. Catherine, last words, and I'm sorry, I'm going to have to cut it very, very short. So just last words.
Well, my thought on fintech and banks is that I think it's inevitable that this revolution will happen, especially as you can see the governments have, taken a step forward, such as Switzerland, UAE, they're clearly adopting this, and people generally, agree that this is inevitable outcome. So for those that are thinking about innovation and, progressing to Web3, love to, see how we can all work together. So thank you very much, Anand, for inviting me here.
Yeah, my pleasure. Thank you, everybody, for being here. This has been a very interesting panel, and I think there's so much to discuss in fintech and banking that we'll just leave it here for now, and the future takes us. Thank you again, and have a wonderful, wonderful day, and welcome from Digital Davos.